Get ready, crypto enthusiasts, because the news cycle is absolutely exploding, and you need to know what's happening right now. This isn't just another update. This is your front row seat to the most electrifying developments shaping the future of digital assets. We're diving headfirst into a market that's moving at lightning speed, bringing you the essential intel that could redefine your strategy. Don't blink, because you might miss the next big wave. First up, a seismic shift is happening in investor sentiment. We're talking about a major reallocation of capital, with a clear favorite emerging and leaving many others in the dust. Is the altcoin dream fading, or is this just a temporary pause? We've got the breakdown that explains everything. Then, prepare for a deep dive into a project that's laser-focused on security, especially for those looking to safeguard their long-term wealth. This innovation is built with a specific, high-security approach that's turning heads and could set a new standard. Plus, we're witnessing a bold move from a company in Southeast Asia that's completely reimagining its business model, embracing a strategy that's already proven its mettle on the global stage. Is this the blueprint for corporate transformation in emerging markets? And finally, we're exploring a fascinating initiative that's pushing the boundaries of digital asset security with a forward-thinking approach to future technological challenges. This is the kind of innovation that secures the future. Stick around, because you won't want to miss a single second of this. Make sure you're subscribed and have that notification bell on so you never miss an update. Investor sentiment sees major shift. The cryptocurrency market is currently experiencing a significant rebalancing of investor priorities, with capital increasingly flowing towards established digital assets and away from smaller alternative cryptocurrencies. Bitcoin's market dominance has recently dipped to its lowest point since mid-2023, standing at approximately 54%. This decline, while notable, does not signal a broad-based altcoin rally. Instead, it reflects a cautious investor sentiment where Bitcoin and Ethereum are being favored over the wider altcoin market, which has seen an average decline of 12% in the past month among the top 100 coins. Several factors are contributing to this trend. Macroeconomic headwinds, including persistent inflation and higher interest rates, have created a risk-off environment, making investors wary of speculative assets. Altcoins, often perceived as riskier, are particularly vulnerable to these conditions. Many altcoins are struggling with weak underlying use cases and a lack of significant institutional interest, further dampening their appeal. While Ethereum has seen a slight increase in market share, its gains are not substantial enough to indicate a widespread resurgence in altcoin activity. Analysts suggest that the market is likely to remain in a consolidation phase until there are clear improvements in the macroeconomic landscape or a breakthrough in blockchain technology that captures investor imagination. Regulatory uncertainty, especially in major markets like the United States, continues to cast a shadow over the digital asset space, discouraging speculative trading and investment. The absence of a clear catalyst, such as a dovish turn from central banks or a significant technological innovation, means that investors are likely to maintain their preference for the perceived stability of Bitcoin and Ethereum. This period of consolidation presents a challenge for altcoin projects that rely on speculative capital to drive growth. Projects with strong fundamentals and clear utility may weather this storm, but many smaller altcoins could struggle to maintain investor interest. The current market dynamics underscore the importance of fundamental analysis and long-term vision in navigating the volatile cryptocurrency landscape. Investors are looking for resilience and proven value, which, for now, are predominantly found in the leading digital assets. But what happens when security needs to be absolutely foolproof, especially for your long-term savings? We're about to explore a project that's building exactly that, with a unique hardware-first approach. Hardware focus for secure Bitcoin savings. A new open-source Bitcoin savings wallet, Bitcoin Safe, has officially launched, aiming to provide a highly secure platform for individuals, families, and companies focused on long-term Bitcoin storage. What sets Bitcoin Safe apart from many other desktop wallets like Electrum and Sparrow is its stringent requirement for hardware wallet usage for all mainnet operations, significantly minimizing security risks associated with software-based solutions. This commitment to hardware security is central to its design philosophy. The development of Bitcoin Safe, led by Andreas Griffin, has been underway for over 2.5 years with a dual objective: to simplify the often complex multisig setup process and to reduce reliance on external servers, such as Electrum servers. Griffin stated, "I started over 2.5 years ago with this wallet, and I had two goals: to make multisig easier and to not need to rely on Electrum servers." The project recently received a 1-year grant from OpenSats, awarded in March 2025, which is dedicated to supporting these development efforts. Built using the Bitcoin Dev Kit (BDK), Bitcoin Safe's code is open source and available for auditing on GitHub. Clients can be downloaded for free from Bitcoin Safe org download, with compatibility for Windows, macOS, and Linux. Crucially, Bitcoin Safe enforces the use of hardware wallets for mainnet transactions, explicitly prohibiting the use of software-generated private keys or seeds. For savings, there is just no way around a hardware wallet, Griffin emphasized. The wallet supports major hardware devices through various connection methods, including QR codes, USB, and SD cards. This mandatory hardware integration is designed to protect users' significant savings by mitigating common vulnerabilities and reducing the likelihood of user error, often referred to as footguns in software design. The wallet features a user-friendly multisig setup wizard that generates comprehensive PDF documentation, including wallet descriptors and essential send/receive tests to verify the configuration. This ensures that users can be confident in the correctness of their multisig setup. Furthermore, Bitcoin Safe utilizes the Nostr protocol for end-to-end encrypted synchronization of transaction and address labels across multiple devices. "I created a protocol on top of Nostr to link these computers and synchronize the labels seamlessly," Griffin explained. This allows multisig participants to share partially signed Bitcoin transactions, PSBTs, effortlessly, with encrypted messages stored on relays for asynchronous access. Version 1.50 of Bitcoin Safe introduces a revamped user interface, enhanced with contributions from a dedicated designer. Key updates include a sidebar for managing multiple wallets, improved transaction views for sending and signing PSBTs, and a mempool visualization offering real-time block and fee data. The update also incorporates numerous quality-of-life improvements, such as keyboard shortcuts, tooltips, and clearer error messages, alongside bug fixes to ensure a smooth user experience for both novice and advanced users. But what happens when a whole company decides to bet big on Bitcoin, completely transforming its business model? We're about to look at a fascinating case study emerging from Southeast Asia. El Salvador's quantum-resistant Bitcoin strategy. El Salvador, the first nation to adopt Bitcoin as legal tender, is reportedly developing a groundbreaking strategy to protect its digital assets against the potential threat of quantum computing. This proactive approach aims to future-proof the nation's Bitcoin holdings and infrastructure by integrating quantum-resistant cryptography into its digital asset management framework. While specific details are still emerging, the initiative highlights El Salvador's commitment to innovation and security in the rapidly evolving digital landscape. The threat posed by quantum computing to current cryptographic standards is a widely discussed topic in cybersecurity circles. Quantum computers, once fully developed, could potentially break the encryption algorithms that secure much of today's digital communication and financial transactions, including those used in blockchain technology. Recognizing this future risk, El Salvador's strategy is designed to preemptively address these vulnerabilities, ensuring the long-term security and integrity of its Bitcoin reserves and related financial systems. This initiative positions El Salvador at the forefront of national-level digital asset security, exploring advanced cryptographic solutions that are resistant to quantum attacks. Such solutions typically involve developing and implementing new mathematical algorithms that are computationally infeasible for even the most powerful quantum computers to solve. The nation's move signifies a forward-thinking approach to technological risk management, setting a potential precedent for other countries and institutions holding significant digital assets. The implications of this strategy extend beyond mere technological adoption. It reflects a deeper understanding of the evolving threat landscape and a commitment to maintaining sovereignty and security in the digital age. By investing in quantum-resistant technologies, El Salvador is not only safeguarding its current Bitcoin holdings, but also demonstrating leadership in responsible innovation within the cryptocurrency space. This could bolster confidence among institutional investors and other nations considering similar digital asset strategies. As the world inches closer to the advent of practical quantum computing, El Salvador's proactive stance serves as a crucial case study. It underscores the importance of anticipating future technological challenges and building resilient systems from the ground up. The success of this strategy could pave the way for wider adoption of quantum-resistant measures across the global financial and technological sectors, ensuring a secure digital future for all. But is this the only bold corporate move we're seeing in the crypto space right now? We're heading to Southeast Asia to see how one company is making its own Bitcoin-powered pivot. Thai firm pivots to Bitcoin treasury strategy. DV8, a publicly listed company in Thailand, has announced a significant strategic transformation, appointing Jason Fang, a founding partner of Sora Ventures, as its new chief executive officer. This leadership change marks a decisive shift for DV8, moving away from its traditional focus on media advertising towards a core strategy centered on Bitcoin treasury management and digital asset acquisition. The move is heavily inspired by the successful Bitcoin-first strategy pioneered by U.S. company MicroStrategy. Jason Fang brings a wealth of experience to DV8, with over a decade dedicated to Web3 investments, having personally invested more than $100 million across over 150 companies in the blockchain and crypto sectors. His background includes leadership positions at notable firms like Sora Ventures, Moon Inc., and Meta Planet, positioning him to guide DV8's ambitious digital asset initiative. This expertise is expected to be instrumental in steering DV8 towards institutional-grade digital asset management and adoption. To fuel this transformation, DV8 has recently secured substantial funding. A consortium acquired a 75% stake in the company, valuing it at approximately 550 million baht. Furthermore, DV8 successfully raised 241 million baht through the issuance of warrants in July. These capital injections are earmarked for executing its new Bitcoin-centric strategy, aiming to establish a robust digital asset treasury. The company's ambition is to replicate MicroStrategy's successful model, which has seen the latter company amass a significant Bitcoin hoard and achieve notable market performance, even outperforming major tech stocks. MicroStrategy itself, now rebranded as Strategy, continues its aggressive Bitcoin acquisition. The company recently purchased an additional 3,081 BTC for approximately $356 million, bringing its total holdings to an impressive 632,457 BTC, valued at around $68.6 billion. This latest acquisition followed a significant legal victory for the company, where a class action lawsuit concerning its Bitcoin accounting practices was dismissed. This ruling removes a key legal uncertainty and is expected to bolster confidence for other corporations considering similar treasury strategies. DV8's strategic pivot under Fang's leadership, backed by both private and public market financing, signifies a growing trend of corporate adoption of digital assets, particularly Bitcoin, in emerging markets. Thailand's increasing openness to blockchain innovation provides a fertile ground for DV8's transformation. This move could potentially establish DV8 as a leading example of corporate Bitcoin treasury management in Southeast Asia, influencing other regional companies to explore similar strategies and further integrating digital assets into the mainstream financial ecosystem. So, we've seen a big shift in investor focus, a new wallet prioritizing hardware security, and a company going all in on Bitcoin. What's next? We're wrapping up with a look at how El Salvador is preparing its digital assets for the future. And that's a wrap on today's rapid-fire updates. We saw a major shift in investor sentiment favoring Bitcoin and Ethereum over altcoins, a new secure Bitcoin wallet emphasizing hardware for savings, a Thai company making a bold pivot to a Bitcoin treasury strategy inspired by MicroStrategy, and El Salvador exploring quantum-resistant security for its digital assets. Don't miss out on any of the action. Hit that like button if you found this valuable, subscribe to Bitcoin Bulletin for your daily dose of crypto intelligence, and smash that notification bell so you're always the first to know. Connect with us on all our social platforms for more insights and join the conversation in the comments below.